The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
I wonder if it was listening to me. Here we are on leg D in the 1 minute chart. That was really important. As I said a moment ago, it had to start immediately pulling away from that midpoint of that Chapman wave Roman candle. Let me just explain that for a moment. So this is a technique I developed, way back. And it's a very simple technique. What happened is I looked at these candles at a certain point, that was decades ago, and I thought, oh my goodness. And one of the reasons why it became even more important, actually, let me do this. I'll do it right now. Let me go right here. Let me go to my black background chart. Let me see if I can go all the way back here to S&P, SPX.X. Now, some of you might remember this, but back in 2008, in the summer of 2008, we made a top, and it looked like it was a pretty serious top, and a lot of people were saying, oh, this is it. And I said, I've still got some leftover work. I don't quite understand this, why it should be the top, when in fact, some of my technicals were still acting quite well. And I looked at all the different candles, and there was a particular candle that I noticed. Okay, let me do this here. So click. I'm going to take a little time to do this because I think this is just a consolidation day. So, and we're going to go back in time, and we want to go back to last day, 10 years. I don't want 10 years. Let's go 20 years. Okay, yeah, we go 20 years back. Click. I'm always amazed at the speed. This is just a nothing, but to go back so quickly and have all the data just pop right up. So this is what we're looking at. This is now the weekly. I don't want the weekly. I'm going to make this a monthly. Here we go. Okay. So we were looking at this, and there was this very sharp pullback. It doesn't look sharp now, but believe me, at the time it was right there. And I remember discussing this. I said, this is a technique that I've discovered some time ago, and I use it periodically. It's called the Chapman wave Roman candle, but this is an inverted Roman candle. And what it is, in this particular instance, this bar right here, that was July of 2007, opens at 1506, has a high of 1555, and a low of 1455, and then it closes halfway from the top to the bottom, and it closes at 1455. All right. And my rule of thumb is that within 2 bars, if there is a test of a shorter time frame, it's a monthly chart. So this would have been, I would have probably said, let's even make it a daily, let alone a weekly. But if at any point in the next 2 days, it starts to trade halfway into this wick, which is at 1535, there's a good chance that it's going to test the high. Well, lo and behold, 3 bars later, that's 3 months later, it goes to an all-time high. On October of 2007, it goes to 1576.09. Well, the very next candle has the exact same pattern, but it's inverted. This is the one that always makes me really nervous. If at a top, not at the bottom, but if at a top, a potential top, there is a candle that looks like this Chapman wave Roman candle, what it does is it opens at the high, and in this case, it opened at 1545.79. That happened to also be the exact high. So there wasn't really any wick. A wick, even if it was 1 penny, it would have been a wick. But it pulls back very sharply, but then manages over the period of the whole bar, and that could be a minute bar, it could be a monthly bar, it could be anything, managed to close halfway or more from the base. And not when I say more, it's either a half or 2/3 of the way from the bottom. And lo and behold, it went down to 1406, and it closed at 1481. That says if within 2 bars that there is a close on a shorter time basis halfway into the wick, right there, halfway into the wick. Be careful, because in this case, 1435, is that right? Yeah, 1435, it can test the low or even take it out. Well, lo and behold, the candle of January of 2008 does exactly the same thing. And we have another candle that goes halfway into the bar. So I have a lot of respect for this particular technique. And we saw it. It wasn't exactly the same, but it was very close. Back in February of 2018, we saw that candle. That's a monthly chart. So within that context, what do we have? We have right at the top, in January of 2009, we've got the Chapman Wave Roman candle. And basically, we've been in a sell mode ever since. This is a monthly chart. All right, so I'm saying to you, I have respect. Why? Because if this candle gets taken out, it's just been taken out as we're speaking, and it holds, because it's a shorter time frame, if it holds under 32,870, so 32,750 for more than 60 minutes, there's a real good chance very quickly we're going to test the low, and that was 32,643. I don't know if that's going to happen. I'm just saying to you, that's the technique. All right. Within that context, let's get back to our story. So there's a Chapman Wave Roman candle. That's on Friday. Monday was a spike to the upside because we had a Chapman Wave very high trend gauge reading, which says within 2 sessions there should be a very sharp futures rally that should help the market. Sometimes it comes from the bottom. It could be coming anyway, but be careful because it can happen. Certainly happened yesterday. So I'm saying be careful. And one of the things that I've said to my subscribers in the opening call is I'm real careful. I don't like what's going on here. Let me just show you a couple of things. I'll do this real quickly. Look, here's the S&P. S&P is now pulling back. It's down 6 at 39.76. There was a trough C. It tried to pop up. The 9 is under the 14. The price is under the 9 and 14. The price, all the prices are under the 200 period moving average. This is not a good looking chart. Normally, once I flip to once this candle, let me just do it on the Dow so I can go apples to apples. Once, I usually use it for the Dow, flips negative, I haven't gone short. Usually I would flip to the short side right here. Not only that, we had this Chapman Wave midpoint of the long elongated rectangle where we closed under it. And that says, be careful. You're probably going to test the low of the rectangle. We've done that already. Now the next one is at 32,573. I'm a little bit cautious. Let's put it that way. And there are a lot of reasons. I mean, just grab any, look, here's Dow stock, DOW, Dow, Inc. It is actually the Dow, DOW, Dow Inc. Chemicals. Look, made a peak F in the daily. It's only a peak C in the weekly, but I can just go through so many charts all over the show, and you will see that, yeah, look, Microsoft is in the Dow. What did Microsoft do? It made an unusual peak G 2 weeks ago in the 270s, and here it is at 249 under the 200 period. So I'm pretty cautious. We still have long positions. We only have long positions. We haven't had any short positions, but they are so specific, they are so generic to what is working in this market that I don't feel terribly uncomfortable about those positions. But I'll be back in a moment. Dow is now down 183, S&P is down 5. Right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today, and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched The Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi, folks. So let me just deal with a couple of questions that I've had over the last 2 days. And I have to thank Larry Pesavento for sitting in for me yesterday. He always does a fantastic job. And of course, what is today? Today's Tuesday. Tomorrow a week, he does his webinar. That should be fabulous. Just the way he organizes it, the way he has pre-planned all these different moves. That's the thing that I'm totally fascinated with. That you can select beforehand exactly where you want to enter positions, which he does, and he knows exactly what his stop is. It's really nice. In my case, yes, I have the same thing some of the time, not all the time. But at the same time, I'm also using moving averages and other things. I'm looking at price movement. But the most important thing is a question came in. Basil, could you just quickly review your sequence in the Chapman wave? Yeah, I try to identify the lowest low bar. On the way down, I use the letters, but I don't use the letters anywhere close to what I do on the upside. On the upside, it's imperative. On the downside, I always do it because it gives me a lot of other information. But for the actual entry point, I usually use my technical indicators. It gives you a start, and then once the price has started to move up, as long as it doesn't take out, let's just say that low that I'm talking about right there, let's just say it's at 20. As long as every rally doesn't take out 20, it can go to 20.01. It can even go to 20. It mustn't go to 19.99. Then it's still in a buy signal to maybe buy mode. But what I look at is I alphabetize all the way 7 higher peaks. Alphabetize them sequentially up and down, A, B, C, D, E, F, G. On the way up, uppercase. On the way down, lowercase. It's as simple as that. I'm just identifying each peak, and it's a floating ladder until it makes a peak. And then if it pulls back, the moment it takes out that peak by 0.01, it doesn't matter if it's the New York Stock Exchange. It could be 35,972 if it goes to 73 or 72.01. That starts a new leg up. So it's a floating leg until it makes a peak, and then it's a floating leg again to make the next peak. So it's A, B, C. It's that fourth highest peak that other things can happen. That's all you need to know, because at peak D, you can get an instant restart, you can get a recycle, you can get a major decline. Look at this. You don't have to know what time frame this is, but look at that major decline from that peak D. Look at the time frame of the arch formation. Look at this arch formation here that made a peak D, the fourth highest peak. Look at this, it made a peak D, and then just 1 bar later, it made 2 bars later, it made an E, and then it pulls back sharply. So that's the technique that I use. But in the meantime, let's get back to our story. And what I wanted to say is, as I'm going through more and more and more charts, the greater the chances are that the top that we made just recently needs a little more time to digest these gains. That's really what I'm saying. So within that context, I guess Microsoft made a peak G. That's an unusual peak G, but we've had a lot of Gs lately. And then you can have an alternate. I don't want to make it complicated. The eyes glaze over. It could be an alternate count G/C that usually goes to a D. Doesn't matter. What we are looking at here is within the context of all these different things. Look at the XL count, and if I've updated it. Yep. Peak G, double top, and it's now from the 144 area to 138. Not a big deal, but it is a peak E in the weekly chart, so it's digesting these gains. Look at the SMHs. Really important to have the SMHs lead, and they're not leading right now. They're just kind of neutral after the spectacular move from the 196 level to the 250s. And here we are at 240. The peak D in the weekly chart. I've got all these different patterns that I look at. This is the vertical test of strength or weakness. And if it happens, it can give you a good clue that it's going to be a strong rally. Look at that October low. And we're actually still long our positions, the diamonds and the 3 times long UDOW from that October low. But we're out of some trading positions right now. So we'll be looking to do that. And I've said to subscribers, I am quite prepared to go to the short position on some of the indexes if I see it. I think a chunk of the move down, it might have already been made. So I'm looking at this and I'm saying, well, we still have positions that we want to buy. A question came in, could I look at the XLF? Yeah, the XLF made a peak D. Remember, we're always looking at those peak Ds. You made a left side, right side price time match. That's bar symmetry. Now it's got a sell mode in the daily chart. Weekly chart is still at a peak C. It could move higher, but it's holding quite steadily above the 200 period moving average. This is a good sign. I need to see at this particular point that the XLF has internal strength. I do not want it breaking down below 3450. Right now it's at 3571. Let me go on. Talk about the volatility index. We started talking about that quite a lot last week. And when I say the volatility index looks like it wants to bounce off this trend line and this major support, and we're going to be watching it closely. And in fact, it did bounce from the 17 area up to the 23s. Now it's at 20.87, and it's actually pulling back today. It's down 8 cents at 20.87. And my thinking here is that fund managers are very mixed about what's going on in the market, and that there's a weighting of WEIGHT, a weighting of fund managers thinking that the move is up rather than down, and therefore they are not taking insurance. And you will see that insurance kick in if once again we hit that 200 period moving average, but this time, instead of like we did in December, where we popped over into the 25s and then flopped and came all the way back to the 17s. It's almost cut in half. No, not cut in half, a sharp pullback. And then it goes from the 17s up to the 23s. This is going to be different, because if in this particular move, which could come about when all the fund buying is out of the way in the next couple of days, I'm going to be watching this, because if at any point the VIX index actually closes above 23.25, that'll be above the 200 period moving average. That'll be the first time in quite a while, and that'll suggest that you're looking at triple digit moves down in the Dow, very sharp move down in the S&P. Haven't got that yet, but I'm just watching it very closely. So we're a little bit cautious, even though we have long positions, and we still have potentially long positions that we want to buy. Now, another question came in. Could you look at the SLX? That's the Van Eck Vectors Steel ETF. Yeah, I didn't quite finish the notations here. I didn't have a chance, but I'm going to do that now. You see, make it as visually easy as possible. I'm only looking at basically three patterns of movement. The patterns themselves can create a movement like a large rectangle or a narrow long rectangle that can last a lot longer than your patience. But I'm only looking at straight line up or down, straight line up, arch formation, cup formation, cup formation, cup formation, cup formation, or an arch formation. On the way down, that's what you get, arch formation. If you take out that left side low, be careful, because you could go a lot lower. And that's the dreaded H that we talk about. This is the positive Y, reverse Y. So those are the three patterns that we're looking at, a mix of 1 and 2 or 1 and 3. In this case, it's a mix of 1 and 3. And usually if you fail, if the price fails at an A or a B and goes to an A minus or a B minus, you got to be careful because it's saying that you've got that arch formation. Then you've got 3 bars, 2 to 3 bars in which to close above the left side low. So far, the SLX has done that. So that's a good sign so far. And if you look at the weekly chart, peak C, the MACD is good, stochastics, okay, at 77%. On-balance volume is very weak, just as it is in the daily. So something has to happen here to really get those steel stocks to move concertedly, because I want to see that as part of the infrastructure work that we're looking at that should see money flowing in. I'll be right back. The Dow's down 129, S&P's down. Oh, unchanged. I'll be right back.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charted software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
All right, question with Dan Basil. I have some 397 SPY puts for today. Wait, today's Tuesday. Your thoughts? Oh, you have them today, not that they expire today. Yeah, I'm looking at the SPY at 397.19. Oh, now 397.11. Oh, now 396.96. Whoa, going once, going one around the bend as they follow the SPY colors, the QQQ and VIX index starting to rally. And the bend comes around second furlough, and we're looking at 397.23. Yeah. So I'm looking at the SPY, and this low here. If this low gets taken out in the next 15 to 20, what are we doing now? 15 by 11 o'clock. If there's a close under 396.45, that's the low of the day, then there's a really good chance that the gap that started, this is a SPY because it only trades intraday. The close yesterday at 4 o'clock had a high of 396.59. So as I look at it right now, that 359, 396, 45, that's already been filled. And I would suggest to you that if that gets taken out, then this entire candle with a low of 395.05, that becomes your target. But I don't like when the MACD is so close to turning positive with the histogram improving and the stochastic has rallied to 37%. On balance volume is rallying and the price isn't breaking down, but is holding. Because it says at any point there could be a quick pop, and that pop says that if it goes to 390, what is that price there? 397.67, then it's just stuck in a rectangle formation, and you will have to wait. There's a good chance that it's going to take out that low, but you've got to wait for it because it can go into that rectangle formation, and you know a rectangle formation, a narrow rectangle formation, can last a lot longer than your patience. So we're looking at it, and I would say that we're now at 10:32 in the morning Eastern time. It's got to happen right now. As we're talking, you've got to start to see this pull back. I think it's going to happen, but I'm just giving you the warning that the stochastic is failing, but it has rallied quite nicely without the price. I don't like that when the price holds and the technicals improve, but the price doesn't. It means the next time that the technicals pull back, it should drag the price down. You don't know, but that's what I'm telling you. So I hope that helps you, Dan. 396.45 would be my target. A close 2 out of 3, 1 minute. This is a 10-minute bar that I'm looking at. I would even say one close in the 10-minute bar below that says, yeah, it could keep going down. So, and now if you're looking at the daily chart, this is the SPY. Let me show you what I do. Just easy techniques. Look, there's an up arrow. Why? Because you've already made a peak A, B, and a C, which says that you should go to a D. Let's see if you've done that. A, B. Yep, there's your D. D. And then this is A, B, C, second D. Becoming important, those Ds are. Yeah, this is just saying that you've got your arch formation right here. It's desperately trying to rally in the 1 minute chart. We'll see what happens because you've done your left side, right side price time match. Let me just see if I can do that here. Look, this is from this left side right here. Go to the high bar, then you click on, and you just say, is this going to be a 1-to-1 match with the fulcrum in the middle, the plumb line? Well, so far it's already tested that. It's trying to rally. Yeah, so let's just watch this closely. But yeah, if it's a daily chart, and what I would say to you is this, even though it could be one of those days where you actually close at the low, it could be, I'm just saying, I would still scale out of it on the way. Why? Because it's the end of the month. Anything can happen with buying. I mean, there are big blocks of buying that need to come in. This is the charter. These people have a charter to put money to work. So you're kind of vulnerable to that. All right, so watch this closely. I would just say to you, it's going to be much tougher if it starts to trade at between 2 and 3 o'clock this afternoon above 298.75. If that's happening, that's a problem. But I think, I don't know if you got, is this an intraday? Guilty as charged. I'm not sure. All right, so anyway, that's what we're looking at. You want to see any rally right now fail because the technicals are very weak. The 9 still under the 14. I would just stick with that for the moment, saying, hey, there's a good chance that by 10:37, yeah, it has to be very soon. If it breaks above 39.45 at this particular point, that's going to use up time. But between now and the next couple of minutes, it needs to test. It has to slide under 397. All right, let's get on. So what we're looking at here is that I'm somewhat cautious, and as I say, cautious, but we are selectively buying, and we're buying in areas that I think are under the radar. I don't know how long they'll stay under the radar. Okay, the question came in, which is exactly the question that I was going to go to. I wanted to talk about in my analysis in the opening, the 10 o'clock. Tiger Financial News Network Market Update, I mentioned the IWM. Well, the IWM, this is very important it's right in this first part of the year that often, not always, and it actually hasn't happened for a long time, but often enough over the decades, you start to see the Russell 2000 small caps find buying. And the reason why it finds buying is that there's been a whole bunch of other factors that have seen the general market move up, but the IWM has been lagging. And all of a sudden they play catch up. And they play catch up, and it's as if they are now in a world of their own. You're looking either at interest rates or it's oil, and people are saying, oh, yeah, there's very small caps are not as affected by oil as the larger indices, et cetera, et cetera. I don't know what it is. There's always a story. But this is exactly when, if it's going to work at all, and so far it's outperformed to a certain extent the S&P, the Qs, and the SMHs, semiconductors, not good enough. It needs to really rally. And at 189 right now, 189.37, if I start to see this trading at 196.35 in the next few days, I'm going to be, in a way, satisfied that the rotation that I've been talking about for so long is finding another sector to favor. That's all I'm doing. And if it does favor that sector, then there's a good chance that the small caps will find favor. That's all you want, is for fund managers to turn around and say, okay, this is where we're going to start putting money. We don't have that yet, but I am looking at it, and all the technicals are weak in the daily, but not so in the weekly chart, in the daily chart, not so in the weekly chart. All right, let's get on to a couple of things that I also was asked about. Could I look at, where did it go? The symbol was, so the Hang Seng, okay, but there was a particular stock, was it? There it is, okay. So let me just find that over here, my myriad computers here. XPEV, here we go. It's a Chinese stock, I believe. XPEV. There you are. So XPEV is the XPeng. It's probably Speng or something like that. You know, say X, Xpeng. Inc. designs, develops, manufactures smart EVs. It's trading up today. It's up 48 cents at 9.09. Yeah, I've been doing quite a bit of work, and I got someone sent me yesterday a whole thing about where did I put it? Taiwan. Let me go through it. Let me find it about EVs and how this guy, he's actually an American, I believe, has got a
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for Dave's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Yeah, let me just do this. So I found it. It says battery swapping EVs are all the rage in Taiwan. Will it work abroad? Gogoro, Gogoro, the company that revolutionized EVs in Taiwan, is launching pilot projects from Korea to Germany. This is a fantastic story written by Megan Tobin from Taipei, 22nd February, 2023. When entrepreneur Horace Luke first landed in Taipei 2 decades ago, the first thing he noticed were motorcycles. Then, like today, the streets were clogged with millions of two-wheel vehicles. I don't know if you've ever seen that. It's amazing. Their ambient raw background noise anywhere in the city, even indoors. During his time working for companies like Microsoft and HTC on projects like Xbox gaming systems and Android phones, Luke mulled over the idea of mobility. In 2011, he pitched the idea that would form the core of his company, Gogoro, an electric vehicle that didn't have to take up space and time charging its batteries, but instead relied on a network of batteries that could be swapped at roadside stations, like filling up gas tank. Multiple investors and vehicle makers told him the idea was impossible. Anyway, it's a fantastic story. They have 400 to 500,000 swaps a day. They've done work on the fires that could be emanating, but it's usually from the vehicles themselves rather than the batteries when they are charging. Just an amazing story. I'm sure you could look it up. It's terrific. And that's what I've been saying. I was talking to someone the other day about electric vehicles, and that the hybrid is at the moment still the best thing around. But at the same time, what we were looking at, and what I said is, can you imagine putting that kind of money that you have to put in a new company, and then suddenly someone kind of leapfrogs the whole idea of what you're doing and comes up with something like battery swapping? I mean, what a business. I mean, that's why I always admire Elon Musk, because to have gone into what he did, to put the kind of capital, it's not like it's a garage that you're going to go your little computer chips and all that. This is huge. Every vehicle takes up a huge amount of space. I remember back here in Framingham, Massachusetts, when the GE factory was around. I took my son and a friend. We went through it. By the time my daughter came along, it was gone. No, I think it was still there, but it had changed a lot, and then it was gone. And it's a fantastic thing. You see, from no vehicle to a final vehicle with a body, the chassis gets put on, all that. Things have changed today, but it was an amazing thing. And it's huge. You need so much space and expense. So this is a fantastic thing. All right. So we're looking at Xpeng Inc. Xpeng designs, develops, manufactures smart EVs. I don't know what this is, a Chinese company. But it's way down. This was trading up in the 70s, had a little bit of a pullback down to the 8s. It's trading at 914 right now. Yeah, I think that you treat this as trades for the very long term. I pick a one or two, and you just put it away, and you put it into your if you actually get the stock certificate, just put it away or whatever it is. But you can't, either you're trading it or you're just holding it and saying, will this be one of those that succeeds? That's all you can do. So I like this today. It's up 6% at 914, up 54 cents. Yeah, but it's stuck in a rectangle formation. Hey, that doesn't mean to say that it can't go to the 12s. I mean, that's a 30% gain from where we are right now. But it is stuck in the rectangle formation. So yes, on a daily basis, congratulations. I think you're absolutely right. This is working very well. Next thing I want to look at, so the question came in as well. Let me just move back to here. There it is. So I'm not even going to read that. It doesn't make any sense at all, so I'm just going to skip it. So let's just do this, because what I want you to say is that within the context of the dollar is pulling back here. This is a peak C. It doesn't guarantee that it needs to go to a D, but invariably, if the MACD is good, the stochastic's good, the price is way over the 14-period moving average, it's gone from a buy signal to a buy mode at 87% in the stochastic, it is going to go to a D at some point. But we also have the 200-period moving average to contend with, because it's only popped up there a couple of times and it keeps pulling back. So here it is again, popped up there on Friday. Yesterday was much higher, then it closed just under it, and today it's under it. But I'm thinking that if the weekly MACD on the dollar actually, the histogram's improving, but if this does cross positive by Friday, the dollar can have a nice rally. It doesn't have to go to the 108s, but it could go to 105.50, 108. It could do that. 100. Yeah, it could go to 105.80, maybe 106.30. I don't know about the 108 just yet, but that's the way I'm looking at it. And if you look at gold is in this huge consolidation phase. I don't see it having the power right now to get back to the 1880s. I think 1820. It's going to be important. It's at 1831 right now. If it takes out if it closes under 1818 in the next day or two, then it's going to make a lower low. But at this point, it's had a huge move from the 1970s all the way down to the 1810s. It can have a bit of a balance, and that's as the dollar takes a breather. Now, this is going to be important. Let me just show you something. I haven't looked at it. There are. So you remember, Dan, we were looking at this, Dan in New York, you're looking at your option. Now we're looking at this went underneath 396.80. In fact, the last low was 396.79. So this is the kind of action that we've been looking for. It's stuck in the rectangle formation. This is the SPY we're talking about in the 10-minute chart. That was the 1-minute chart. And keep thinking of it. Now it's going from the lowercase h. Remember the rule of that lowercase h? You've got 2 bars, maybe 3, in which to close above the left side low. Well, it never even took out the left side low, but it didn't take out the high either. So this is going from a lowercase h pattern right here to a lowercase m. And now it's ready for another attempt at a rally. This is going to be very important because it took out all the left side lows, and now we're going to be watching. Let's see if the E-mini did the same thing. E-mini, yes, did exactly the same thing. And that is suggesting that, remember what we were speaking about? Let me just go back to it again. The rule of thumb. Got a lot of thumbs. Rule of thumb said that if in the Chapman wave Roman candle, if it takes out the halfway point of the wick on the lower wick in this particular instance and holds it for, and in this particular instance, I said an hour. Well, we haven't even been an hour. We've only been, it's less than an hour. But if it goes into an hour, actually, let me just look at this so that we're talking apples to apples. So you're talking about the Dow itself, INDU, and it went under 32,750, and now it's at 32,700, and it's been there since right there, since 10:11 this morning. So at 11:11, if it's still underneath 32,000, I'm going to say 32,740. It's just a really good chance that even though there should be fun buying today, it's going to test the left side low. Okay, and that's the left side low of yesterday, which is 32. Oh, I should give it to you. 32,643. That's what you got to be careful with. I'll be back. Basil Chapman, Tiger Positions Hour. It's quite a lively show today. Question came in. I will look at Myrna and I will look at AGYS. I'll be right back.
Are you grinding in the market, but seeing little to no return? Or are you a successful trader, simply looking to make your job a little easier? Learn to take the path of least resistance with David White's powerful trading newsletter. David White is an accomplished trader whose deep understanding of technology and the markets allows him to consistently find and share winning trades. Support and resistance define the ranges in which stocks trade. By understanding these trading ranges, David White is able to find the path of least resistance. David White's trading newsletter, The Path of Least Resistance, is delivered daily before the markets open to make every trading day an easy win. Visit TFNN.com today and subscribe to David White's Ultimate Trading Newsletter for $119 a month and try all of our newsletters risk-free with our 30-day money-back guarantee. Take the path of least resistance at TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
So the question came in about AGYS, which is Agassiz, I think this is a therapeutic company, I believe, or Agassiz Inc. Is that what it is? I don't know. I spoke to TradeStation the other day. They don't make it easy to read these things. Agilysis. All right, whatever it is, Inc. AGYS is the symbol. Looking at shorting it. If you're going to short it, it needs to very quickly. Today it's not a bad day, actually. It's up 65 cents. This is not. I don't think this is a shorting. If you're looking at options, I'd rather look at it as an option. I'd rather have a put position, but I have it as possibly going by the between the 6th and the 9th of March. If it closes underneath the candle 3 days ago, 76.53, that would be my target. Otherwise, it's just going to go into a rectangle formation. I don't really see this as a short. In other words, it doesn't show me the impact on the downside. Yes, it has that huge spike to the downside. I'm not sure it's going to fill it yet because it's taken so much time it's taken time and it hasn't gone there. So Myrna is the next thing. Myrna is Moderna. So Moderna has gone to lower lows. We spoke about it the other day. And I still think on the shorter term, I'd stay away from it. I think looking out, it's a company that does have potential products for sure. But if you've done your homework and you're really convinced about this, then I would say Let's look at it again, maybe by Thursday, even Friday. I want to see how it holds at 135 area, because if it takes out 135, it can really easily go down for the third test of 115s, which is done twice, from June of last year and September of last year. It needs to rally quick. That's the end of the show. Wait. What are you talking about? End of the show? End of the show? Yes, it's the end of the show. I'll be back with Tom a little later on today, and these stocks, these shippers are just unbelievable. NAT, which is Nordic tanker, look at that, another high today at 4.40. The other one was TK, which I spoke about the other day. Heard my subscribers and most of them at 6.13.